If you've been waiting for another rate cut from the Bank of Canada, you might have to hold on a little bit longer. New economic data has just landed, and it's changing expectations fast. First, inflation is proving to be tougher to shake than expected. June's inflation numbers showed the Bank of Canada's preferred measure, known as CPI median, rose slightly to 3.1%. Now, these numbers might seem small, but here's why they matter. The bank targets a 2% inflation rate, and right now, core inflation stubbornly sits above that level. Higher core inflation means everyday expenses, from groceries to utilities, aren't easing as fast as hoped. When inflation stays high, it limits the bank's ability to lower interest rates because cutting rates could push inflation even higher. Adding another twist, Canada's labor market remains surprisingly robust. June's employment report shows unemployment decreased slightly to 6.9% from 7%, with the economy adding over 83,000 new jobs. This resilience indicates economic strength rather than weakness, meaning the bank doesn't have the economic justification it needs to cut interest rates right now. So, here's the bottom line. With rising inflation and a healthy job market, it looks increasingly clear the Bank of Canada will take a cautious approach and not cut interest rates at their upcoming meeting on July 30th. Now, let's talk about what this means for you and your mortgage. If you are searching for a fixed-rate mortgage, these rates follow the bond market closely, and recently, bond yields have moved higher due to strong job numbers and stubborn inflation. What this means is that fixed mortgage rates could see some slight upward pressure in the short term, or at best, stay about where they currently are. Unfortunately, that means waiting might not get you the best fixed rate, at least not immediately. If you're on a variable rate mortgage or have a home equity line of credit, you won't see lower payments anytime soon, since the Bank of Canada is expected to hold its rates steady and your payment will likely remain unchanged for now. The next crucial data point arrives on August 19, 2025, when we get inflation numbers for July. If inflation remains elevated, expect continued caution from the Bank of Canada. However, if inflation starts to trend significantly downward, we could finally see the door open again for potential rate cuts later this fall. This data will directly influence future mortgage rates. I'll cover all these figures when they get released, so make sure to hit the like button and subscribe so you never miss an important mortgage update. And remember, if you have personal mortgage questions, I'm offering a free 30-minute one-on-one consultation to help answer them. Just click on the link in the description to book your time slot. I'm Gasenko, your trusted Canadian mortgage broker. Until next time.